Good morning, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog www.fibonaccistalking.com. I regularly post on Twitter using the @fibstalker nickname. Good morning, this is a video review for the midweek update of November the 14th that I only released to my new Slatters subscribers. In this video I'm going to review the dollar index, the euro dollar and the SP500. Let's start quickly on the dollar index. What you see on the screen is the daily chart of the dollar US dollar index continuous contract aligned to the December expiration. You will remember from the weekly review and the midweek update of last week that the euro dollar had this measured move at 79.30 area. It never touched the first target, which was located basically above the highs we saw in July, and indeed it was 84.90, but price never got there, and so price came back. So bears are currently in control, and as we see, we had a reaction at the same support level here, 79.30. Price start moving higher, and at the moment is touching the 200-day moving average as we anticipated. The price of the dollar index could move still higher into the 81.60 area, as we said in the past. Looking at the measured moves we had in the last few days and weeks, you will remember I indicated this measured move here, which had target in the 80 area, 80-70 area. Price then came with a reaction lower. On the Wednesday we received the news of the Obama re-election, and the price didn't get quite there, 80.30, 80.35, but price did not actually trade. So this measured move was a little bit sloppy here. Anyway, it went to target again, 81.20. So at the moment, what we are trading a support level that could keep pushing price higher into this resistance at 81.60, and as we can see, this support traded yesterday, and it has first target in 81.50 and second target in 81.70, so well above this support area. We will see how this is going to play, and if should price go lower, remember that we will have first support from the 20-day moving average. Let's move into the euro dollar. Euro dollar daily, that's what you see on the screen, is the continuous contract. You know, we have been waiting for this support level to trade, and that's the 126.20, 126.30 area. In the past, we ruled out that the new intermediate leg higher could start from the 128.20 level, and we had a sequence of measured move. The first one with resistance in the 130.20 area, and it's a little bit slow. So the first one, 130.20 area, and it touched the first target in 128.20 and then 127.20. In the last few days, I indicated extension anchor, and this extension traded yesterday in 127.70, 127.80 area, and it's trading again in the morning. So if this level is respected, which should see price move into the 126.30 level, and that would be the last the last move lower into this big support level. Let's see the SP500. The SP500, and we have if we look at the long term, you will remember that we identified an important anchor in the 70-90 area, and this anchor has been used now 2 times with success. Every time a measured move originating by this anchor traded, it get to target. The first time was in the 980 level, and we got to 1250 level, and the second time it was again from this level traced our Fibonacci study to the highs, and we had support in the 1065 level, and the target of this setup was right at the tops of September, October, and so this gives quite this makes this anchor very important. So if we trace this same anchor to new highs, we should actually get sorry for this so we will get another support level that comes into the 1130 area, which I have indicated already in the weekly review I distributed it to my newsletter subscribers. So this is a support level here. In order to understand whether price is going to get to that level, we need to understand how price is going to behave at the next support level, which is the support level I'm showing here. It's 1358.60 level, and should price move below 1330 level, so break this level on the downside, then the test of 1130 would be almost certain here. So if we go and look at the sequence of measured move we had so far on the SP500, we can see that we had this setup short in the 1450 area, sorry, 30 area, and actually program trading is using another trace, and we can see this only by observation, and it's not using the Sandy lows on the 30th of October, but it's using the previous low Friday before. So we have a 1431 setup short. We had it, and it touched the first target in 1377, and as we can see, it touched the second target as well. So we now expect a reaction higher, and we have 2 levels of resistance in the SP500 we have to watch. The first one is coming from the same anchor we used to identify the last move, and I gave you this on the video I recorded on November the 12th, so you can review that video. And it traded to the pip here, so, and it touched the first target. So if we use the same anchor new low, we can actually get the next resistance level. So we could see we could see the the SP500 price to rally all the way up into the 1380. There is also another level of resistance that we need to take into account, and this is the next the next extension short in the sequence, 1370. So we have to level where we have to watch. If we break above 1388, we are out of the woods here. It means that this area is supporting price, and we will move higher and then come back to some sort of retest of this area, and then we should start the new leg high, and this would be aligned to what we expect in the euro. But if we break the 1330 level, then we are going to continue lower, and for the euro to go higher, we need to get that divergence I've been telling you about in the last few months. I hope this is useful and interesting. If you want to get these midweek updates, just subscribe my newsletter on FibonacciStalker.com. I wish you a very good day and very good trading day, and hope to see you soon on my blog. Bye bye.